Hi and welcome to a Trader Today for the 9th of October. My name's Tom. I'm a senior trading analyst here at Trendsignal, and we've been teaching people how to trade end-of-day markets safely since 2003. I want to show an opportunity that closed out in the last few days ahead of a new opportunity we'll be looking for at the end of tonight. I'm going to talk about how we identify these trades, what kind of factors we consider, and of course talk about what kind of reward we can actually get out of these opportunities if managed properly. So in this particular example, let's zoom in to make things a little bit clearer. You can see that we have this green sniper disc where my cursor is. This green sniper disc is telling us that we want to buy this market. It's telling us there's a high probability entry point, but what it doesn't do by itself is tell us how far we'll want to take the opportunity. To see how far we want to take it, we need to consider two things: what's supporting this move, and what is the algorithms telling us is the appropriate place really to look for an exit based on the average move in the past. So first of all, we'll have a look at our TradeMate tool on the left-hand side. You enter your account size, you enter your risk. This will give you a stop, a pip size to trade on your broker, and a couple of targets that you can initially run to. It's refreshed it to the latest one we have tonight, so let's go back. You can see initially we have a trade that a lot of people wouldn't think is too attractive. We look for a 70 pip stop versus a 30 pip target. Now, sometimes this can be a really good idea. A lot of traders don't like taking anything that's below a 1-to-1, but as long as it's a high certainty bet, then there's no issue with it. The analogy would be this is you betting that Man City will beat Leyton Orient. It's probably going to happen. No offense to the Leyton Orient fans out there. You're not going to get a great return on capital, but you are likely to get something quickly. We don't necessarily want to go for the starter in this opportunity, though, and that's because what's actually supporting this market. So we have a grey infill. What the grey infill is telling us is that this is a continuation of momentum. But to put that into plain English, we look at the intermediate trend. And if we look from the candle the sniper forms on and look backwards, we can see it's blue. It has been kind of flip and flopping over the last few days. But at the time we take this entry, it's blue. It's in long with the long-term trend. We also have a red to green change color on our vector average, snaking through the candles, and a red to green change color on our trend signal line down the bottom. Not only that, weekly trend is in favor, monthly trend is in favor, charting pattern is in favor. Pretty much anything you could want is in favor of this going further than that kind of, let's call it pessimistic 30 pip target. In which case, most trend signal traders will opt to go for the extended. Now, this is a little bit more attractive, 106 pips. But this is actually something achieved on the first day. So in the first day, as you can see, green line is here. The next candle shoots absolutely through it. Someone who's a little bit more advanced and coming back on managing these trades on a daily basis will instead look to lock in profit as they go and use the active stop system we developed to get the max out of the trade. And what this is doing, if you imagine these red to green lines are divvying up the market from sell to buy to sell, essentially as you're holding this trade, you're taking profit, you're moving your stop loss up, you're taking profit, you're moving your stop loss up. Eventually what's going to happen is we're going to look for a rotation back. Now, this could be a sell-off, this could be a consolidation, this could just be straight sideways movement. It's a little bit irrelevant to holding the trade. But in this case, we get our final exit on the position, the bottom of this candle of about 257.3 pips rather. Now, for context, trading at £1 per pip, £257 for the best part of, I want to say about a week's work or so. We'll check in a second. Not too bad. But the actual total opportunity on this position, if you were locking in as you go, was closer to 412.5 pips. Just for turning up from 20 minutes a day, monitoring the positions and taking more trades as they come available. Just to show you, by the way, if we open up our scanner tool, this gives you all the opportunities that we're looking at for today. So 1 is today, 2 is yesterday, 3 is the day before, and so on. There's loads of opportunities we're looking at because while we're only taking high probability entries on individual markets, we're looking over about 37 different markets made up of currencies, commodities, and indices. If you want to see how we spot these trades, you want to see how we manage them, and you want to learn a little bit more about the markets in general, we're going to be doing a session later today at 10:30. Come along and join us. We'll take questions the entire way through, but more importantly, we'll give you some trading positions that you can look to take later this evening. Hopefully we'll see you there. Bye-bye for now.